In a holiday shortened week, erratic trading left stocks marginally down for the week. The Dow Jones Industrials average lost 0.17%, while the Standard & Poor's 500 slipped 0.14%. The Nasdaq Composite Index fell 0.3%, and the MSCI EFI Index, which tracks developed overseas stock markets, edged 0.61% higher. I'm going to go ahead and play today's intro, and then we will take a closer look at what happened in the markets last week. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. Steps by China to move past its zero COVID policies triggered concerns that its economic reopening might aggravate inflation pressures, sending stocks lower and bond yields higher to begin the week. Technology stocks saw the most significant hit. With dimming prospects of a Santa Claus rally, which is the historical tendency of stocks to rise in the final trading days of the year and the first 2 days of the new year, stocks rebounded strongly on Thursday to erase the losses of the previous 2 days. However, stocks again turned lower to end the week with small losses. In an otherwise slow week for news, 2 monthly reports were released highlighting the market's headwinds. The first was State Street's Investor Confidence Index, which measures the risk appetite of institutional investors. The December report showed the confidence of large asset managers in investing in risk assets like stocks has dropped over the past 2 months, explaining in part why stocks may have struggled of late. Meanwhile, the Atlanta Fed released its Survey of Business Uncertainty, which reflected both declining expectations around sales growth and employment, along with growing uncertainty about revenue and employment growth over the next 12 months. So, what does the bond market know that the Fed is not telling us? Fed officials recently have said that short-term rates will need to climb to over 5% to bring inflation under control. But in this table, you can see that the bond traders say short-term rates will top out at 4.5% in 2023 and then head lower. The bond market is more dovish than the Fed, and perhaps with good reason. The November Consumer Price Index report came in below expectations, and there are more and more signs that inflation has started to trend lower, which may suggest the Fed's work is coming to an end. So, why is the Fed talking so tough? Well, as many of you may recall, Fed Chair Jerome Powell said inflation was transitory throughout much of 2021. The Fed Chair does not want to mischaracterize inflation again. I work with other financial professionals who listen to comments from Fed officials and compare them to what the bond market is saying. So if you happen to hear commentary about the Fed that's unsettling in any way, let me know so that we can review what is actually going on. As always, we will keep our finger on the pulse of what's happening and will automatically make changes in your managed accounts as we feel are in your best interest. If we are not investing your life savings for you, I invite you to learn more about our fiduciary personalized approach at smartmixportfolios.com. All right, that is it for this week's summary. Thank you for staying until the end today. I've got another riddle for you. Remember, if you're the first person to post the correct answer down below this video, whether you're watching on Facebook or on LinkedIn, then we will send you a gift card for coffee on us. All right, today's riddle is: what word does not belong in this group? Blast, paper, castle, coin, box, or storm? Again, be the first person to post the correct answer down below this video on either Facebook or on LinkedIn, and we'll send you a gift card for coffee on us. If you would like the answers to previous week's riddles, visit our website /riddles to find out. And then lastly, later on today, I will be sending out our full economic update. If you're not getting this email and you would like it, you may subscribe to that email list at our website also, which is again, www.investwithccg.com. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.